Hi traders, welcome to another episode on the trades we missed last week. So without much further ado, let's move on to what we had on Monday. So on Monday morning there was a bearish trade here. So around this side you can see a fair value gap here. So this fair value gap price tapped into it here. So you can see price coming to this area because of this fair value gap here. After price taps into it, it gives us our break of structure here. Now we have a break of structure here, and the next thing is a fair value gap. You can see this fair value gap right here. So this fair value gap here is indicating an entry. So this is where we would enter this trade, right above this high is this fair value gap. So where we enter this trade is here to this spot. So this is where we will put our stop loss. So our short position will be like so at this spot. We would anticipate that price will come and give us an entry there. We would use this previous high for our stop loss. We can use this low here for our TP, giving us a 1.88, or this one here. This previous low can be our take profit, and this is giving us a 2.41 risk to reward ratio for this first trade. Moving on to our trade number 2, we have a bearish trade as well. Now this is a fair value gap here coupled with our order block. So this whole area here is a supply area. As order block is being shown, this is where we put our gaze. This is where we're going to look at. So after price taps into this fair value gap on order block, indicating our supply area, it pushes downwards. So after price pushes downward, we can see a newly formed fair value gap here. See this newly formed fair value gap here. So we have first fair value gap, second fair value gap. So this is where we enter the trade. So but because we want a higher risk reward ratio, we would want to use our order block here. So this is where the order block started from. This is our order block here, the last up count before a move to the downside. So you can see how price taps into this order block and gives us a bearish trade. So this is how we put our short position for our trade number 2. So here is where we would put our short position. Here we'll put our stop loss, and you can see how price taps into this area, gives us a short move, a move to the downside. So we can use this extreme low for our take profit. This is giving us a 2.91 risk to reward ratio. So that was our trade number 2. Moving on, we have another fair value gap here. So this fair value gap was being highlighted here, and price taps beautifully into this fair value gap, bounces off from it to the downside. The next is to search for a break of structure. We have one here. We have break of structure here. The next is to find for any fair value gap for our entry. Yes, we have a newly formed fair value gap. We can use this to enter, or we can as well use a more defined area that is using an order block here for our entry to give us a higher risk to reward ratio. I will put our short position as well here, and you see how price taps into it. So we have our stop loss right above this previous high, and price taps into this area. So this would have given us our TP for 1.5 risk to reward ratio. Or you can as well use a more higher risk to reward ratio. This is a higher profits, giving us a 3.41 risk to reward ratio, given our previous low here. That was our trade number 3, which happened to be a short position as well. So after that short trade, we have a bullish trade for our trade number 4. You see this area here, a bullish fair value gap, price comes to tap into this fair value gap, pushes to the upside, and give us what? A break of structure. So after price breaks this structure, comes back, we'll expect to see a fair value gap it will respect. So now we have a fair value gap here as seen. So as price pierce into this fair value gap and into this order block, you can see a push to the upside, just like so. We have a push to the upside, and next thing is our entry. How do we enter here? Our long position here, we enter at the start of this fair value gap here, and our stop loss will be below this previous low right here, and our take profits at the previous high, giving us a 3 a 3.0 risk reward ratio. You can as well put it before this fair value gap. If you are being too careful, you can put it before this fair value gap, and this is giving a 2 risk reward ratio. So the next in line would be our trade number 5. So we have gotten our trade number 3 and our trade number 4 here. So the next is our trade number 5, and our trade number 5 happened to be a bearish trade. We have this supply area, we have this order block and this fair value gap. So after the supply area, we can see price coming back up to tap into this area, supplying again. So what we wait for is a newly formed fair value gap and a break of structure. So at all these stages, we have no newly formed fair value gap, neither do we have a break of structure after price taps into this area. But here along the line, you can see a push to the downside and a break of structure here, giving you that's clue that price wants to push to the downside. So we have a break of structure here, and we have a fair value gap. So this is indicating a chance to enter this trade. So now we have a short position here at the start of this fair value gap, and at the top of this previous high is giving us our entry style. So this is here would give us our TP, and we have a 2.98 risk to reward ratio. So the next is our trade number 6. Our trade number 6 happens to also be a bearish trade. Now we have a fair value gap here at first, as usual. Search for our first fair value gap. Now price taps into this area, pushes downward. So we have a tap into this area, and you can see a newly formed fair value gap here. We can speak that price will tap into this area and push downward, just like so. So we have a tap into that area, giving us our entry, short position here, and we have a stop loss right above this high. Our entry at the fair value gap. The next thing we'd search for is a reason to stop the trade. So we have here a fair value gap. Now this fair value gap can indicate that we should stop this our trade here. So this is where we end the trade. So you can put it here. So this is giving us a 1.46 risk to reward ratio for our trade number 6. And the last but not the least is our trade number 7 on Wednesday. So we have a fair value gap, price taps into multiple times and a push to the downside. Now after that push to the downside, you can see a bearish setup and a break of structure here. So after this break of structure, can cite a fair value gap at this spot. So this fair value gap here would be our reason to enter this trade. So as price taps into this area, we'll just enter the trade there for our short position here. So at the previous high, we would place our stop loss. So at this previous high, that's where we put our stop loss. And moving on is where we put our take profits. Now we'd have to stretch back to our left hand side to see where we can put our take profit. So we just went back in time and there was no reason for us to take our profit here. So we can as well use this previous low here, giving us a 2.12 risk to reward ratio. So and that is that for our last week trade. So guys, let's move on to our chart and back tests. And see you guys on the next episode on the trades we missed. Don't forget to subscribe, like, and share to other traders. Peace.